Broadcast. Welcome to the Zaner MarketCast, your one and only spot to keep up with all of the agricultural market news. My name is Joe Nikruto. Today, I'm here, as always, with
Dan Hussey.
Dan Hussey. Not a lot of stuff to cover today in the grain and livestock markets, but we're going to do the best we
always
can.
Find a way, don't we?
Yeah, we'll find a way to talk through it. We're going to discuss some market movement, hopefully shed some light on what all that means. And what it meant here today was basically full stop in the ag markets while we wait for WASD on Friday. How's it going out there? Going to get 2 inches to 1 foot.
Getting a little chilly, man. What is
lake
this?
effect snow here in this neck of the woods. That's what they're saying. You know how they do Snowmageddon, but it's going to be lake effect. And so I'll actually have to come to Illinois to get away from that. And so, but man, I think it's crazy. There's still, all the trees here still have leaves on them.
Yeah, that's the worst time. That's like the worst time to get that snow because then you can't get your leaves up and stuff. Right. That's what I'm worried about right now. We had rain last night. I got a yard full of leaves that are now wet. There's not much I can do because it's supposed to maybe snow and rain some more. So it's going to be not the way you love to start fall, but what have you? At least the leaves are beautiful, right? You've got the fall, the changing colors. Maybe have a sip of pumpkin spice latte here before we go full Christmas, right?
Just do what I do and fire up the John Deere lawnmower and get out there and just run them over. Go 2-3 passes and there'll be leaf confetti and you don't have to worry about it.
You're not wrong. You're not wrong. So where should we begin today?
We should begin with alerting everybody that, as always, keep in mind everything we talk about here today, futures trading does involve risk of loss. Please take a careful look at your personal risk profile and make sure that this type of activity fits for the goals that you and your enterprise have. And when you have questions about the risks or you have questions about how to manage the risk, you just call Dan or I and we'll help you get to the bottom of that right away. No problem. Dan, I would guess from the looks of things on this weekly update chart that maybe the safest place to start would be wheat. Huh?
Yeah, sure. A nice little pullback to start. Well,
open
nice
the week.
Yeah,
open the week, and I've still got December on any of these. Correct me if December's. I believe December.
Yeah, December. I'm
high
still
open
looking
interest.
At December.
Yeah, high open interest. Open the week at 534. The high was 555. Low 526 and a quarter. Closed at 527 and 3/4. That was down 6 1/4 on the week. But I'll tell you, carving out into not a great close, not a great look. A lot of these markets. New highs for the move, retreated a little bit on what I believe to be profit taking, a general idea that the U.S. is under some pressure. The stock market's kind of retreating a bit.
Yeah, which seems to risk off everywhere.
Somebody's risk offing somewhere. It looks like to me, you can't have Santa Claus come to town until the Grinch shows up first. So that's the way that works, in my opinion. But brutal move here in wheat on a daily chart, isn't it?
Yeah, 2 days off this high, nearly 30 cents. I think if you clock it right from highs to lows, I guess off by a penny there. But I broke out of that 18-day and never really came back to test it. So maybe this is the grand test of the 18-day moving average, that red line on the chart that we could see a little bit lower down at a 522.
But also that 522?
Yeah, it would also be a test of that 520 area where the 50 and 55-day moving averages are. You don't love those breaking out over that 100-day and then failing to hold it at all on another test back down below. But I don't know how many times we talked about it. We wanted that run up into the 200-day, up into that downward sloping trend line. I hope that wasn't it because, boy, that was a front run of the idea that we were looking for this market to achieve. I just hope that wasn't it, which with this type of pullback, it may not be. There's some volatility in these past short covering rallies that can keep wheat going. But like you said, I think there's a lot of headwinds. We got overbought in the near term. You've got financial macro concerns, right, about the economy and other things you're talking about. You got seeing headlines about slowdowns in unemployment, headlines talking about need for lowering interest rates, not bullish things for the broader economy. Wheat hasn't had much of a trend. It got a short covering rally here. Let's call it what it is, and may continue a short covering rally, but you got to hold some of these figures if that's going to be the case.
Hella drama when and if we do get a test of that 18-day. It's also that 18-day is propped up by what appears to me to be a 50-day moving average at 519.
Yeah, a little golden cross there is not a bad look either.
Yeah, funds still short 82,000 contracts is the estimate from our friends at ADM coming into this morning. So that to me is pretty interesting. We did not cover that much short position on that.
And we still got that open gap too, right? Like we come down to try to come down into this area and you can't get the 515 to close that gap again. Like, come on. We go right back up to find resistance. You should go. And hey, I think there's a better resistance level a little higher, which I'm not saying you step in here and catch the falling knife on wheat, but I think there's a clear line in the sand of where you can set risk, some levels that make sense for entry and potential targets above.
From a purely trading perspective and for purely educational purposes, we're a speculative person to attempt that gap certainly makes for a real nice target, doesn't it? If you can get stuff bought in that 517 to 515, 514 area around that gap, and then you start seeing closes below that gap, you will not have to be wrong for long, right?
Exactly, right? You know exactly where to set that level. Maybe pick up some put protection, right, at just below the gap or below that 510 area, because you don't want it at that point. But again, that's the reason you look at these levels. You say, hey, that's a line in the sand that maybe there's some participation that the market cares about in it going around. We can use that to set up a trade strategy around as well.
December corn, inside week. From the looks of this chart, we opened 431 in December corn. The high was 436, low was 426 and 3/4. Last trades 427 and a quarter, down 4 and a quarter. Funds are going to be long. Nope, still short. 77,000 corn.
Wow.
Coming into today. Let me double check.
Impressively short corn.
Still 77,000.
They're really fighting
short.
It, huh? They're
now,
trying to make...
If Karen was sitting here, she would say nobody really knows because we haven't seen the CFTC data in a very long time.
Fair.
These guys do an okay job of tracking and whether they're on it.
If anybody's sitting there watching the tape trying to figure out who's doing what, it's the folks at an FCM.
Guys, yeah, for sure.
Absolutely.
And so that 77,000 to me, though, so we've held in here without the benefit of much fund short covering, which I find very interesting.
Yeah, and I want to look here because we've seen some drop in the open interest too, and I want to make sure that when we flip over to March, we see that open interest really rising and that volume coming up, because you can't just go off of, in my humble opinion,
you're right,
December's open interest right now because we're in the midst of a roll. We've got
Goldman roll.
You got to equalize those right now to see what we're doing, and the volume was pretty good, right? You had that volume spike up here into this 200-day moving average, but now we've petered off. December corn holding that 18-day moving average at 427.25 here into the end of the day, into the close. Okay, that's a pullback to test a technical supportive area in a market that's otherwise pressing into resistance. The 200-day at 436.25 was resistance above, and this really big, not big, but this kind of important double bottom that we broke below back in July, right? The old contract lows, we're trying to break out above those too. You got this downward sloping trend line, the 18-day coming above the 100-day, the 50 and 55-day moving averages crossing above that blue 100-day. That's 50, 55-day on my chart, the green one there. Got this upside down or inverted neckline on the head and shoulders pattern. So there's a reason to think corn has a chance to go here above this 436 area, and I think head up towards that downward sloping trend line around 460 still. And you've got some lines in the stand below, including now a trend line against the lows that comes in somewhere around 420. Your cluster of moving averages, and hey, today's low and the 18-day moving average at around 427.25.
Right. On a daily chart, we kind of leaking out of the bottom of that, or trying anyway. What was that? What was the low on the 31st? 426.5. Today's low 426.75. So held that low. I don't know. I don't really want to hang too much of a hat on that. We're leaking out the bottom end of that
little bits of important, right? Like little wins, right? Sometimes, like when you've had this nice run up, you've hit major resistance, like really big resistance, everyone, right? This is a level that if we get back above, you open the door back to the highs of 2024. What is this? 2025 for the old highs. That's
460 easy.
Yeah, that's nothing to sneeze at when we were just a couple months ago wondering if we were going to be above $4 corn.
And so here, again, high drama because you've got a market bounded by the 18-day on the low end.
Yep.
And overhead, you have what I think is a 200 bar moving average, right?
Yeah, 200-day moving average, that purple one. That's right.
all of this happening 7 days away from your next WASD.
Right.
So certainly a time for folks to pay attention. It's and a lot of question about what we're going to see on this WASD, right? Nobody's really too sure how the USDA is going to handle this. And you saw a lot of talk this week. Karen did a lot of work trying to figure out what kind of methodology, how they were going to come at this with the government being shut down. But
Sure.
It looks like they're going to use their normal methodology, and we'll see how that plays out. But a lot of eyes on this WASD for 1 week from today, November 14th, I believe that is.
Yeah, 1 week from today. That's right, next Friday.
So we jump out of corn and say, let's take a look at the soybean market.
Soybeans.
And so Jan beans, here's another market that kind of got out to real nice highs for the move, but could not hold it. Opened the week at 11.14. The high was 11.37, low 11.03.5. Closed at 11.17, up 1 3/4. Funds now long, right? Now long.
Yeah, I would imagine they're not short.
184,000. They estimate these funds to be long. 184,000 beans. That's a pretty big number, in my opinion. That sort of caught me. That number caught me by surprise as I just read it right now. 184,000 contracts they're long. Yikes.
Yeah, that is an estimate, right? To be fair, but I think it is a pretty fair estimate when you look at the volume here that spiked into January on this move higher. I mean, a really, really big move. You even had big volume days here even for November, which is losing open interest, right? So like massive gain in open interest on that gap up and rally up here into the 1140 area. And this is the weekly chart still for beans. So the last 2 weeks, we've seen massive volumes there, and which is how funds managed to flip from being basically short to now in a sizable long position. And I think the big question is, are we trapped long, or are we going to keep pushing this higher? Well, this week and yesterday in particular was kind of the test of that $11 figure, which you're hearing everybody and their mother now talk about the importance of $11 for soybeans. We don't like to stay in the $11 handle for very long. And I'll switch over to a continuation chart real quick so you can see what we mean. When you look at $11, this is what everyone's talking about. Between 11 and 12, there's almost no sitting still, right? We push up and through or not at all. And it'd be interesting if this is all she has up into the area that we've held, but you'd expect at this point if we're holding 11 to the downside, maybe we're going to push up towards 12. I'm not making a prediction here. I'm just pointing out the notion and the talk of the town right now that $11 in beans isn't a place we like to sit still from. But 18-day moving average still below us down at 1081. So like you could fall all the way back to 1081, still not fill the gap here that's down around 1058 and still be above these old range highs that came in around the 1080 and 1090 area. So it's quite remarkable how the damage that was done yesterday alone, you could still fall another 40 cents and still technically be just testing support.
Yeah, and done on rather decent volume too, right?
Yeah, right. Massive volume up here, right? Which has got all those funds long.
You had what appeared to be wait and see volume, as the market is indeed waiting to see if the Chinese are going to certify, ratify, sign, whatever word we want to use, this agreement about 12 million metric tons, right? Between November, December, and then end of January. In the last couple of days, they've been talking about 12 million metric tons before the end of the calendar year. I thought they still had into January. I don't know if we don't get a real deal, I'm not sure that's going to be that important. But it looks like the market's waiting to see, okay, show us.
Right.
Could not get too much information this week. I was not surprised to see that downdraft. And actually, I think that this market's going to take another run at that 18-day. That gap down there looms large, in my opinion.
I agree.
And just a move toward that gap. And this is going to be very telling, I think, from a purely technical perspective, right? If they can't get into that gap and we start heading back up, that's going to be a pretty big statement.
Absolutely, right? You've got that cluster of highs. There's the 18-day now. There's a lot of things that are ahead of that gap fill that should and could provide support to this market for a continuation of that uptrend. So I think it goes without saying, I think we're both in agreement that if we get down there and start filling that gap, we're probably not going to stop there. I think a test of even $10 might be on the table at that point, but we're getting ahead of ourselves because we're still way up here. But I do, I mean,
way up here is right.
I do want to point out, like, the very quick short covering rally we saw on wheat 2 days down, we're back into testing that 18-day moving average. I would not be surprised to see that type of pullback and continuation early next week, maybe ahead of WASD. We're just finding a bigger range here. Do we want to break out above 11? Do we want to break out down back below it? I think that there's some room to play here now for the next week into a report on Friday where this market could get very volatile.
And to that end, I'm trying to think of or figure out the exact right way to describe what to me is just a feeling. But you watch some of this market,
right,
and you see these rather maybe outsized is not the right word, but you've seen some pretty big moves. And then it seems to me that when that move is complete, or whichever participant was doing what they were doing, they bought everything they were going to buy. It seems like these algos are getting really good at going back then and filling in the vacuum that is left, the empty space that is left behind that buying, that back and fill. You're really starting to see some aggressive back and fill in some of these markets.
And I think when you have really volatile headline, emotionally driven markets, you see a lot of that because maybe beans went too far. Maybe we only were supposed to get to really 11, but the headlines and the emotions drove us another 40 cents higher. And now we're unwinding that irrational exuberance in this rally that otherwise, as we've discussed internally amongst our teams, haven't been the rosiest of reports when you really break down the facts and figures of what we know outside of what we hope for soybean exports and demand.
184,000 contracts is what drives this. Do you know what I mean? When the funds decide this is a fund sponsored.
Remember where we were when we were flipping and we were short, right? We were back below that gap.
Right. And what we said at the time was if the funds decide they're going to build a long position into this, beans are going to go for a ride.
Yep. So, and there they go.
Now we wait and see if the fundamentals catch up. Again, I think internally, this market move is viewed with some suspicion when you compare where we are price-wise with what we think the Chinese actually need in terms of beans. There is some talk, and I don't know, I'm interested to see what you think about this, Dan. I don't believe that this is about beans. I think this is about internal politics in China, and they're willing to make this deal to smooth out the international waters.
Oh, yes.
Because they've got internal discord within the Communist Party. I don't know where I stole that idea from. I certainly didn't come up with it by myself.
And there could be some truth to that, but I think it's even simpler to say without a conspiracy theory about CCP internal issues, there's still a communist nation that needs to feed 1 billion people and is reliant on the rest of the world for the food supply. They don't want to be any more reliant on any one nation, including Brazil, than we want them to be reliant on just Brazil. They like the idea. Heck, I think if China had their opportunity, they would have another 2 continents producing soybeans for them and corn and other row crop products so that they weren't reliant on just US and South America. Because at some point, South America, in my opinion, will wise up, become mature, and start to push back on Chinese demand because they realize, hey, if we partner maybe a little bit more with the US on this as a trade deal and partner, we could actually be looking towards China as, I don't want to say more combatively, but right, you can take them on from a negotiating standpoint, from a place of better strength. But long story short, right, China doesn't want to just rely on one country. So smoothing over those deals, making things look good on the international scale, Joe, is I think definitely on the docket for what Xi wants. Trump wants that. He wants the win that he can take back to constituents and say, hey, look at the deal I brought you. Unfortunately, as we've seen in the past, and Karen keeps reminding us in some of our internal discussions and in her newsletter, that if you remember correctly, Trump's first round of trade deals, right, China found their way out and weaseled the way out of those ones as well. So will we see similar actions here this year and in the current deal we've seen? Will we get some clear details on what the deal and when some of these timeframes and amounts need to be completed by, and all of the rest? Will those actually get answered for us in a timely manner? With the government shutdown, we're still trying to catch up on other government data points too. So we're not out of the thicket for a headline-driven market.
The reason I think that this is worth mentioning and falls outside of the normal foil hat stuff that I do enjoy speaking of so often is that if this is not about price, right? If this deal is about, let's smooth it out. And here's another big if they are indeed already long Board of Trade futures, right? That 184,000 contracts, if they've got a few of those, they are not so concerned about the price that they pay. And so we spend a lot of time saying, well, we're competitive, we're not competitive. Chinese are going to buy it if it comes back down. this may not be about price. This may be about, okay, we'll buy your beans, leave us alone for a year while we handle this business. And then, because a year to the Chinese, come on, let's be realistic.
Right. They think
you know
in centuries, right?
They just hit the snooze button on this deal. So they want to make
sure. They know they just need to get through the next
snooze.
4 years, right?
Yep,
So the next president is.
And so they don't want to get hosed. So they got a little hedge on in the futures for these beans. And so it's not so important what they pay. Not to say that, to me, that's the recipe for beans at higher prices, is that the quantities that they're taking are not that great in terms of historical. But if they do come in here and make large purchases or purchases,
right. Look at where the prices already are. Right?
Exactly.
What happens when they actually start buying?
We may have to move a little bit higher. I don't know. It's interesting to think about, and folks might want to pay attention to that if they think about re-owning or using these dips as a place to get involved in re-ownership. I know some folks are just putting those re-ownership strategies to work right away as soon as they're selling the beans. But I think there'll also be other opportunities if we do indeed see a move back to that 18-day, right?
Yeah, agreed. And if you're doing something now, there's ways of structuring it, right, to plan for stuff like that, like doing call spreads and what have you. But give Joe, myself, someone over here at the Zaner Ag team a call to discuss what a strategy for you could look like.
What about meal? That was pretty wild. Last couple of weeks here, we took a break. This week, still prompt December meal. Opened the week 321.20. High was 325.20. Low 310.50. Closed at 317.10. Not too far away. Not too much action here this week.
Right into that 100 week, and right into that 100 week moving average. That blue line on the chart you see right now. That's pretty substantially the resistance I feel like we're into.
Believe it or not, the funds are still short 75,000 meal contracts.
How is that even possible?
Estimated, right? How is that even possible? Estimated 75,000 meal contracts. That's got to be some margin call action there on your hedge fund trend following commodity system. I don't know what to think about that. And certainly this is a difficult time to gather that type of information. We've talked about that at length, but 75,000 contracts short, and we have gone from 270 to 320. I mean, my goodness.
How much of that short though is attached to spread trades? Is the other question. And
maybe you're
spread,
right.
You know,
maybe you're right.
Because if you're short the meal, well, long oil didn't exactly work out for it either. But I don't know. There's other ways to, I think, be alleviating the pressures of that margin situation. But you're not wrong. This market's moved, blown out of every resistance you could draw on the chart. Like, you put a line on it, it's gone.
And what you're getting at there, and we should probably take it to its logical conclusion, is that if you say that you are trading technically, we're technically based.
Oh, no, you are. You just hit the buy button.
Yeah. So if you have, we have rules, and there are reasons for us to be in and reasons for us to be out. If you spend 3 weeks going from roughly 370
explain to me the technical price discovery from October 15th through November 3rd. Yeah, go.
I realize there's reasons that those guys wear ties that cost $300, and I'm wearing a $40 Fila hoodie.
Nowhere in
Costco,
the futures commodity textbook does it tell you about a 1, 2, 3, 4, 5, 6, 7, 8 gap up 9, 10, 11, 12, 13, 14 up day. Jokes aside, though, that is a gap and go type situation, and this is a quintessential pennant bull flag, right? Like,
exactly right. It doesn't look like it's going to get any better.
Right. You've got a flagpole. You've got the flag where you define the bottom of that pennant. It's going to chop around a little bit here. You'd love to see the 18-day catch up and it catch that as the low and then spark up to a new high. Because then you got some price discovery, right? Like, there was no price discovery. This was just straight up. Like, I'm surprised we weren't like just limit up with that type of velocity. So the algorithms are getting smarter. They don't just come in here and buy a million contracts. They do one contract a million times over and can really build up that position on the way up, it looks like, and do so without inducing a massive shock because, wow, there was no one left selling meal.
It'll be interesting to see where they do decide to cover the rest of that short position.
Sure.
We'll pick a spot. You got 75,000 contracts. You should have covered it a week and a half ago.
And to be fair, when you go out to that continuation chart, like, meal has a long way up to go. We can still get back to $4 here and not really have done anything meal doesn't do every year or so, right?
Good point.
Not saying it's gonna happen, but like, okay, how does a chart look before it does? Well, maybe like this.
You just start funding this position, and that side of the office, you have to go over there and tell them, no, trust us. It'll be fine. Just make the margin call. Bro. Yeah, it'll be fine. We think we got it. And so that brings us to the meats. We have the meats, and somebody has the meats. But this chart, my goodness, Jan feeders opened the week at 333. High was 339.97. Thought maybe you could get into that gap on the weekly chart, but no. Low 311.40 and closed at 319.57 and a half, down another 12 points for the week. Come from 380 down to a close this week of, let's just call it 320. 380, 320, 1, 2,
and you
3,
gotta
4
step
weeks.
back to that daily continuous chart and like remind everybody, right? Like this is cattle where we were several years ago in 2020, back down there at 100 for a Jan feeder, all the way up here. There's a lot of support on the way back down, and we're just now coming in on that 200-day moving average on the continuation chart, which is at 315.66.
Back in the day when you could spend actual money to pay for animals, whereas opposed to today where you have to sign your entire life and soul on the dotted line and hope that this all works out, right? We've gone from cattle feeding as a business to almost one of those stunt shows that you see on Nitro Circus. This is crazy. Guys talking about buying animals today saying, well, how am I going to protect that? And for all you and I have been sitting here talking about, hey, we'll help you protect. You go back into the options market and even a 20-point spread, they still want you to pay. You know what I mean? It's just crazy money. And so you think, man, this is operating without a net. You know what I mean?
Yeah, we thought we had a net there with that 100-day moving average, went below it, but came back above it. Now back below that, and with some limit down days in between. It's hard to then start throwing some lines on a chart of how far down this can go, or where you would pick the falling knife, right? Or pick it out of the chart. We're heading back down towards the 300 level. Again, I think that 315, 200-day moving average is going to be really important. And again, guys, sometimes some of these moves, it's better to wait for some of the reversal to start to happen, right? Before you come in and be a buyer, right? But what do you do now to protect this on the way down? Well, you hate to say the kind of the woulda, coulda, and shoulda game, but like, hey, we were talking about that on the way up. So
don't say it. You're right. You're absolutely right. But we're not going to say that.
We tried to be humbly reminding folks on the way up, right? Like that we need to think about put protection when markets go this volatile or get this much velocity to the upside, right? They're going to take the elevator down at some point. And you and I have been around long enough to say that, hey, you didn't know exactly when this was going to happen, but I think every futures trader worth their grain of salt would tell you that, yeah, this was gonna happen.
Be disingenuous for me to say that right. I don't even believe that it is still happening. I look at this chart and think, my goodness, because, well, obviously this is a non-delivery month. November, they can do, funds and algos can do whatever they want to a degree, right? You're not seeing a wholesale collapse in the price, in the cash price.
Yeah, and that's where you wonder how far this can go, right? And like
you're not seeing a wholesale collapse in the box beef prices at this point, and so they can move these futures around. And it was Chris Lehner, I think, at ADM that had a nice quote that I should just tattoo on my arm that says, "In these non-delivery months, don't think that just because it's not happening to the boxes, and don't think that just because it's not happening to the cash." Doesn't necessarily mean that they cannot do it to the futures, because they can. They'll move these futures around, and it will take a while for them to get back to the reality that this is where the box is trading and this is where the cash is trading. And so I think that we're in that, right? November 7th, we're in the middle of that, in that we have come rather, there's a bit of a distance that we've traveled here that you haven't seen in the cash and the boxes. And now we got to sit back and wait and see who blinks first. And I just don't know. There's no real technical levels here to hang a hat on. 3 even in the January feeders, just because it's a round number.
Yeah, you've got that 200-day on the continuous chart. It's just a continuous chart. I think you're starting to get oversold in some of the daily RSI, and you got definitely some volume trying to trickle off here. But yeah, at least you have the confluence of being able to look at December fats too for a little bit of confirmation. But you're right, to this point, one day up does not a reversal of a downtrend make. And so I think you got to be aware of that here.
There is a good
as this
start,
markets want to continue going.
December fats, These fats opened the week 230.55. The high was 232.97.5. Low 218.07.5. Last trade 221.35, down 8.32. That is continuation on a weekly chart. We could not get. They tried to get out to the high of last week. Couldn't quite get there. Yet another negative technical signal, and then to carve out new lows for this move down through that 220. Could not hold below the 220, but got down there for a while. And here we have closed up 2.5, just about on the daily chart. What do you see there?
Yeah, a little bit to go, 214, 215 area for that 200-day below us. Getting down there would be out to this high from June, the summertime high. So, okay, you've unwound the run-up, that late year run-up at that point. Daily continuation chart, you're already into that 200-day moving average, which is interesting to see. And also this like channel. You've got this beautiful channel going back to April 2023 on the daily continuous chart for live cattle. Playing with that a little bit, might have a little bit lower to go, but like, okay, folks, if you're looking for a correction of sizable or similar size or warranting, like, okay, we've seen this type of price action in the past. It just happened a couple of years ago. So all that being said, I think there's a chance of a bottom. We're definitely down, I think, far enough. We're oversold. Yeah, we got gap fills above to fill in the feeders, and I'd like to see the fats continue to hold here to give us a little more confirmation.
Long term, it's getting difficult for me to see how this resolves long term. So just the challenges that we were discussing about.
I think you want to see it at least at some point test the 18-day moving averages as resistance. That could be a month or two from now, but like, let's go meet cash in those 18 days. I'm sorry, I didn't mean to cut you off there.
No, I'm saying if I'm 76 years old and I'm raising cattle and they want to do this to me, they want to do this to me on some tweets, and I can't find a way to manage my risk, and my wife would like for me to head out to an antique store or maybe take a vacation from time to time, I may very well be having second thoughts about filling up a pen or 12 or 10.
And even if you're a young guy or anyone who's got financial situations and needs, it's an expensive venture, and you got to put more out there to make less in this type of environment. And nobody wants to do that.
I wonder if this is all going to result in more meat or if it's going to result in less meat at the end of the day.
Yeah. Well, it depends on where that meat's coming from, I guess.
Let that one slide. So really, what we're going to want to talk about early next week is what's going to happen with expectations for this WASDE, right? As best we can get them.
Yeah, right. And I know we're going to have a lot more coming out from our own team regarding those. We're going to have some polls to go over from Reuters and others, right? But I'm sure Karen and Ted are going to be voicing their thoughts on where their WASDE is going to land, and we'll be bringing a lot more to everybody. We're trying to fill in those gaps for what's happened while you were away into this report, because it's been interesting, right? The last couple of weeks of not having anything to sink our teeth into.
For sure. Absolutely true. How about sinking our teeth into a question of the week?
Yeah. What do we got here from producer Carter? What's one everyday item you can't live without except your phone or laptop? My toothbrush.
Yeah, that's a good one.
I win. Yeah, I don't know. Can't live without it. You got one, Joe?
No.
Joe's bicycle.
Old Spice classic deodorant.
There you go.
If it wasn't for Old Spice, you wouldn't be here.
I was going to say, you may not have many friends either.
Yeah, exactly. But yeah, other than that, goodness gracious. That's a tough one. I'll tell you, my is going to get a kick out of that. She's a huge fan of questions of the week, and she's going to say, Carter stumped you both with that question.
I thought our answers were fantastic.
Those are two perfectly good things.
Can you live without deodorant or toothbrush?
No.
Find me the wage-earning American that can.
Maybe that's not the super entertaining answer that folks have come to expect from the Zaner MarketCast, but I guess that's what it is, right? Goodness gracious.
Yeah, it really is. So, but
with that,
yeah, if you're looking for another perspective on these markets, before we go, we want to remind you that you can get that from our Karen Braun's Zaner newsletter. Even if you don't think you have, you've definitely seen Karen charts online and her and if her 86,000 followers on X doesn't prove it, it's no exaggeration to say that people really care about her thoughts on the market. Joe and I often joke that we don't know what to think about until we've heard what she has to say. So check out her
Absolutely.
weekly newsletter, get us signed up in it in the comment section and the information section of this video. Get those crop watch updates, historical chart comparisons, and a lot more. So thanks for listening to the Zaner MarketCast today. And if you need more because you just can't get enough, you can follow us right here on Facebook, Twitter, and LinkedIn at the Zaner Ag Hedge Group. Also, you can get daily market commentary by signing up for our Zaner Ag hotline. You can get hosted by Ted Seifried. This gets you free access to the daily market commentary and gives you a chance to connect with us personally if you have any specific questions about the markets or agricultural commodities as a whole. Like, comment, and be sure to follow along to not miss a beat. And we'll be back with you all as price action develops.
Have a great weekend.